One of the earnings reports and reactions that I think was really interesting today is MGM Resorts. The stock is down over 10% in early trading on Thursday. The report was actually pretty good. And what the market is focusing on, I think, really tells a lot about the short-term thinking of investors right now, especially in the gambling space. But when you look long-term, there's a lot more people going to Las Vegas, spending more money. They're spending money on things like hotel rooms, restaurants. That's actually where you want to see a company like MGM Resorts growing. Table games are going to be volatile, quarter to quarter, month to month, day to day even. So with the stock down big today, I'm going to show why this is such a big opportunity. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's get right to the report. And I'm going to get a little bit into the weeds here and explain exactly what some kind of complicated terminology means in the gambling industry. So this is the highlights. They always start with the things that management wants to tell you. Record third quarter revenue, bought back $300 million worth of stock. Don't be surprised if that actually goes up now that the stock price is falling. Bought back 40% of shares since 2021. This is actually one of my long-term theses with this company. Shares are relatively cheap. Management is buying back stock really aggressively. So if you have days like today, management can use buybacks as a weapon against the market dropping like it is today. So this could actually be a good buying opportunity and be accelerated by those buybacks. A lot of the discussion on the conference call was about BetMGM and their online gambling growth in areas like Brazil. I'm not going to cover that a lot here on this video. I look at the online opportunity for MGM specifically to be optionality. So if something comes of it, great. It's not something that management is going to be investing a lot more in the future. They put about $1 billion in that, but that's likely behind us. So if there's some sort of cash flow growth in the future, awesome. That will help the valuation, but it's not something I necessarily want to count on either. Now, this is the segment results. They break this down into the Las Vegas Strip, regional casinos, and then MGM China. One of the things that I'm seeing was a disappointment from the market was a 13% drop in gambling on the Las Vegas Strip. That is true, but it also needs context. Net revenues overall, and this should be more important than what is happening just on the casino floor. Revenue overall was up 1% compared to a year ago due primarily to increases in non-gaming revenue. So what is going to be more sustainable? Is it going to be how lucky you are at Baccarat? Is it going to be, does a whale show up in September or do they show up in October? Do they decide not to visit at all? Or is it going to be, can you fill your hotel rooms, charge a really nice rate, and get people to spend money on shopping and eating and all these non-gaming activities? Non-gaming is actually a bigger segment of Las Vegas Strip revenue by a pretty wide margin than the casino. So what's going to drive revenue? It's not the casino. It's going to be all these non-gaming things. That's why casino revenue can be down pretty sharply and revenue overall can be up. But I'll get into those numbers in just a little bit. Adjusted property EBITDA. This is going to be a proxy for cash flow before rent payments. And that was $731 million for the quarter, up about 2% from $714 million a year ago. So again, revenue and adjusted property EBITDA are moving in the right direction in the Las Vegas Strip. So when you see that there's disappointment in the Las Vegas Strip, think about that context. Regional resorts, this is an area where things are a little bit volatile over time, but you can see that revenue is actually increasing about 3%. Adjusted property EBITDA, again, up a little bit to about $300 million. I don't look at those as necessarily huge growth opportunities, but if they're going to continue to churn out cash, all the better for investors. MGM China, this is where we are seeing pretty significant growth. $929 million in revenue. That was up 14% from a year ago. And adjusted property EBITDA, this is just two casinos they have there. $237 million. They're on pace for almost $1 billion in adjusted property EBITDA from that region. Okay, but let's get into some of the numbers because this is where you need to understand the details and exactly what's going on in the casino. There are a couple of things that MGM Resorts discloses. Each of these companies disclose things a little bit differently, but what they say is this is the casino revenue. So this is the overall, how much revenue is the casino making, but break that down into table game drop. This is basically how much money is put down at table games. So if you walk up to a table game, you give them $100. It doesn't matter how many times you play, the drop in that scenario is going to be $100. The win is going to be when you cash out your chips and you have $70 left. That $30 that you lost is going to be the win for the casino. These aren't perfect numbers, but that's the way they kind of aggregate things because these are the numbers that they can measure and they can report on an ongoing basis. And generally, over time what the win percentage is going to be within a pretty good range. But you can see that this is volatile quarter to quarter, especially depending on Baccarat. I will get to that in a little bit, but that's actually the biggest revenue driver for any given day or any given month. Even on the Las Vegas Strip, this is almost 100% of Macau's revenue, but it's even a huge driver on the Las Vegas Strip. And so if only a handful of gamblers don't show up in a quarter, and that's what happened in the third quarter, that can really impact your numbers. So a little bit unlucky compared to a year ago. Okay, this win number is going down, but this 13% drop in casino revenue is not really indicative of what's happening. In fact, this is a better judge. 7% drop in table game drop. Slot handle was actually up 4%. And what we need to do is look at those numbers compared to the Las Vegas Strip overall. This is from the Nevada Gaming Control Board, and they give these numbers every single month, but this is for the third quarter, July through September. So the third quarter numbers. So either the drop number or the win number, depending on which one you want to look at, and the win number is down 19%, but that is going to compare to what's happening in Las Vegas overall. 19% drop in win or casino revenue from a year ago. Slots about in line with what MGM Resorts is doing. Table games, this number is about the same as their win, and their table game drop was actually fell less than that. But again, zoom out. If you do 12-month numbers, revenue is actually up on the Las Vegas Strip. So you can have a weak quarter, and management talked a lot about this. There were, I think it was 8 days that was over 120 degrees on the Las Vegas Strip. People just aren't going to go out and gamble when it's that hot. So there can be events, it can be bad weather, lots of different things impact the region on a quarterly or month-to-month basis. Pretty down month, but that doesn't mean that the region is doing poorly. The other thing to look at is right here. Remember I said Baccarat. Baccarat is normally the largest revenue generator in a casino, even though you may never actually see it if you go to one of these casinos. A lot of the Baccarat play is in those back rooms, in those VIP rooms. $228.2 million in win, but that was down 49% from a year ago. This is what management was talking about, that the big players who are playing Baccarat just didn't show up in the third quarter. But normally this would be much bigger than 21 or blackjack. So blackjack play actually up, Baccarat play down pretty sharply. This is the volatility of the casino business. And so if you're going to look just at the casino numbers, you got to understand what you're looking at. But here's what I think is ultimately more important, because this is long-term going to be a better indicator of how the business is doing. How is room revenue doing? Well, room revenue is up 7%. Occupancy improved, now 94%. Average daily rate, that was up 3% to $243 million per night. Revenue per available room, that was up 6% to $229. So all of these normal operating numbers doing extremely well. People are going to the Las Vegas Strip. They're just not gambling, especially those really, really high-end gamblers who can make or break your quarter, but the mass market is playing. So those numbers need a little bit of context. I look at this as a pretty good quarter because this is what I want to see growing long term. Baccarat is great, but it isn't a business I want to count on in the Las Vegas Strip. So hopefully that helps with those numbers. Regional casinos, similar numbers here where you get the table game drop, win, slot handle, and slot win. A little bit of growth in slots. No real change in the numbers for table games. MGM China, this is where you are going to see a pretty significant change. Revenue up 12%. Table game drop. They're not even going to, this is where a vast majority of the revenue comes from. That was up 4%. Win a little bit luckier than a year ago. That was up 21%. So that's one of the reasons you have a little bit of improvement in MGM China. And remember the other piece that I talked about earlier, the shares outstanding. So this is shares outstanding from a fully diluted basis, 303.5 million. That is down from 351.4 million a year ago. They are buying back stock at an extremely rapid rate, and I think that will continue, may even accelerate if the stock price stays low like it is today. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So why do I think the stock is cheap right now? Let's look at the results, and this consolidates all of their businesses. And all I'm going to do here is take this adjusted EBITDA number, and I'm going to subtract out rent. Okay, so $3.6 billion minus 1.7 billion, and then I'm going to annualize that, so divide by 3 times 4. When you do that, you get adjusted property EBITDA of about $2.5 billion from MGM Resorts. Then you have to look at the enterprise value of the company. So you have debt. When you add in the long-term debt and the current portion of long-term debt minus the cash, $3 billion in cash on the balance sheet, you get about $4 billion worth of net debt. Plus this $11 billion market cap, the enterprise value is right around $15 billion. So that means, just based on those really simple calculations, the company is trading for about 6 times the cash or the adjusted EBITDA that it's generating from the business. 6 times. So they can buy back 15, almost 20% of their shares outstanding every single year. What this doesn't include is any sort of upside from the online gaming business. Remember, I talked about that as just pure upside. I don't want to price that into that valuation number, but that should be getting more profitable, not only in the US, but then you have launches in Brazil, certain parts of Europe. Most of that investment should be behind us. That should be just pure upside for MGM Resorts long term. The other thing is they have another casino coming in 2030. That is in Japan. It is very possible that that one casino, which MGM Resorts is going to own 40% of, is going to be the most profitable casino in the world. It will likely generate in excess of $1 billion in adjusted EBITDA just from that one casino, potentially even much higher than that. I think the proxies to look at there are Las Vegas Sands resorts in Singapore, and then also some of the bigger resorts in Macau. So that's where I'm getting those numbers. We don't have any real projections from them, but that could be a really meaningful impact on the business. So you're getting a stock that's a really good value today. Operations, when you actually look under the hood, what's actually going on in the Las Vegas Strip, what's going on in Macau, what's going on in the regional business. I think there's tailwinds behind each one of those segments. The decline in the Las Vegas Strip, not exactly what it seems from the market, based on what the reporting and the market is reacting to. And there's a lot of upside that's not really priced in right now. So I think this is a phenomenal value for investors. At the worst, management is just going to continue buying back stock. That should give you appreciation long-term of 15 to 20%. And there's plenty of upside from there. But let me know what you think about MGM Resorts and the value today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.